Silver is an amazing story, and it's for maybe the past 3 or 4 months has been basically the most exciting place to have any money invested. Now, the background of silver is great because it's got two stories, really. One is the monetary metal, and when gold goes up, currencies are being debased, silver comes along with it. Although there's another timely part also, and that is Chinese trading is shutting down for a week because of a holiday, and that just leaves the paper markets where all the manipulation happens operating. So we could see a huge amount of volatility in the next week or two. Barely matters from the point of view of stackers, the people who have just been buying a little more silver each month or whatever.
Silver has emerged as one of the most exciting investment stories in recent months, driven by both monetary and industrial demand. As currencies continue to be debased and gold prices rise, silver follows as a powerful monetary metal with significant upside potential. Analysts like John Rubino highlight silver's dual role, a hedge against inflation and a critical industrial commodity. With Chinese trading temporarily paused due to holidays, volatility may increase as paper markets dominate price action. However, long-term silver stackers remain focused on steady accumulation. For investors seeking inflation protection and growth, silver investment trends in 2026 look increasingly compelling. Now, we present the clips from John Rubino's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Silver is an amazing story, and it's for maybe the past 3 or 4 months has been basically the most exciting place to have any money invested. Now, the background of silver is great because it's got two stories, really. One is the monetary metal, and when gold goes up because currencies are being debased, silver comes along with it. The other, it's an industrial metal that we're kind of running out of. Each year, industry uses more silver than mines produce, and the silver that's left over, that's been in inventory all along, is shrinking. And there's some question about whether the paper exchanges are going to see enough physical demand that it taps them out and they have to default. And that's the really timely part of the story here. Although there's another timely part also, and that is that Chinese trading is shutting down for a week because of a holiday, and that just leaves the paper markets where all the manipulation happens operating. So we could see a huge amount of volatility in the next week or two, but that barely matters from the point of view of stackers, the people who have just been buying a little more silver each month or whatever, because the long-term story is so great. So my advice for the next few weeks would be to enjoy the volatility from a safe distance. Don't be too wrapped up in it because the underlying fundamentals are great. Just stick with your silver positions. Don't let a big drop on any one of these days shake you out, because any big drop that happens in the next week or two will be reversed out once everything goes back to normal. Gold and silver are way up, which means the miners, especially the high quality miners who control their costs, are looking at massive increases in earnings and cash flow at least in the coming earnings cycle, and probably much longer further out than that. So the earnings reports that these miners are going to release in late February and early March are going to be great. And assuming there's no big trauma going on in the market at the time, it ought to have a positive impact on the mining stocks. So if you're dollar cost averaging or using lowball bids or whatever to get into the mining stocks, you've probably got a good month or two at least in which they put up positive surprises over and over again. And the people who are paying attention to earnings momentum and cash flow levels and things like that are very possibly going to be piling into this market. So we got lots of volatility in the physical market and really good earnings reports in the mining sector to make this a really exciting month going forward.
Silver is emerging as one of the most compelling investment opportunities in 2026, driven by powerful monetary and industrial fundamentals. As currencies weaken and gold prices climb, silver benefits as a key monetary metal. At the same time, global industry consumes more silver each year than mines produce, tightening supply and shrinking inventories. Concerns about physical shortages and paper market volatility are increasing, especially during temporary Chinese trading pauses. Long-term silver investors continue dollar-cost averaging, focusing on fundamentals rather than short-term swings. Meanwhile, high-quality silver mining stocks may report strong earnings and cash flow growth, attracting momentum investors seeking precious metals exposure. Let's get back to the interview.
Physical is finally, we've been talking about this for over a decade, right? Someday physical is going to start dominating, and then the price will go way up because of that. And then, that's playing out according to the script, except it took a lot longer than it should have. But what we're seeing in the physical market isn't just industrial demand, and industrial demand is a very big deal. Solar panels and electric cars and power plants, they all need silver along with a lot of other critical minerals. But governments are getting into this now too. Russia, China, and India are buying a lot of metals, including silver. The U.S. just announced that it was going to set up a critical mineral stockpile, and silver is included on that list too. So not only do you have, Tesla and Google out there buying a lot of silver, but you've got the big governments of the world too. So the wind is absolutely at the back of silver right now, because you've got these big players who, in the case of governments, they can literally print money. And in the case of a lot of these big corporations, they can print something better than money, which is new high-powered shares of common stock. So, you've got a tremendous amount of potential demand out there on the physical side, and nowhere near enough physical metal to satisfy all the demand if everybody does what they say they're going to. Google, for instance, just announced, or Alphabet announced their revised capital spending for the year ahead, and it was way up. It was already high, and now it's up to like $185 billion or something like that. And a lot of that is going to go into AI data centers, which use varying amounts of silver. And you've got these new electric car batteries coming online a year or so from now that apparently are much better than today's batteries, and they use a lot of silver. So you got things like that out there in the market where governments are not price sensitive. They're buying because they need it as part of their national security policy. Companies that know they're going to need a lot of silver going forward, and they can't shut down the production lines because they run out. So they have to buy without a lot of price sensitivity. And these new technologies coming on board that use varying amounts of silver, but also can't just be shut down because silver isn't available or it's doing things that it shouldn't be doing. They all have to have silver. So if silver was just an industrial commodity, that part of the story would be good enough to make it a strong buy in the longer term. As Rick Rule said, sometimes the mining stocks will do better than the metals, and this might be one of those times. But, if you're buying a few silver coins a month, there's no reason to stop that, no matter what the price goes to in the short run, because the longer term story is phenomenal. Oh, and then there's Elon Musk announcing that he's going to put data centers in space. Presumably that's going to use some silver along with a lot of other important metals and minerals too. So, wherever you look, you've got something going on that's both unprecedented and really positive for silver. Well, yeah, it could be that they're trying to force down the paper price of silver and hope the physical price follows, so some of those big players get to step in and buy a lot of physical. That's par for the course for the commodities markets. You can never know what's going on behind the scenes. You can never trust a given trend because it can be reversed out in a heartbeat. So all you can really do is look at the fundamentals long term and position yourself so that when fundamentals finally dominate pricing, you're on the right side of that market, and in the meantime, I heard from a lot of friends who were kind of new to the silver market just lately when it tanked, because they were thinking, wow, okay, it's been going up for a year, so all I have to do is buy call options, and then it'll go up for another year and I'll make a fortune. And they were totally baffled when it just tanked because it didn't occur to them that that was a possibility. And it is a possibility. It happens in all bull markets, especially markets that are easily manipulated, like commodities. So we just have to live with that. And again, you can turn it to your advantage if you have lowball bids in on mining stocks or something like that. They tank and you get them for 20 or 30% off today's prices, then they go back up. And that's a very common pattern, and it's one that could repeat this time very easily. It's easy to conceive of a 30% drop in the average silver miner and gold miner, followed by a nice big run back up to today's levels. So, if you've got the risk tolerance to be able to treat that like a buying opportunity, then it is an opportunity.
Silver demand is accelerating as governments, tech giants, and renewable energy industries compete for limited physical supply. Beyond its role as a monetary metal, silver is critical for solar panels, electric vehicles, AI data centers, and next-generation batteries. Nations like China, Russia, India, and the United States are expanding critical mineral stockpiles, adding long-term price support. With industrial consumption exceeding mine production, supply shortages could eventually push physical silver prices sharply higher. While paper market volatility may trigger short-term drops in silver mining stocks, long-term investors view pullbacks as buying opportunities. Strong fundamentals position silver as a strategic asset for future growth. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.